Hi, I'm Ross Mayfield, Investment Strategy Analyst at Baird, and we are back for another weekly update with our friends at Strategas. Today, I'm thrilled to be joined by Brandon Fontaine. He is a research analyst, primarily focusing on economics and fixed income, but with a specialty in the firm's proprietary slim and manufacturing research. So, we're going to talk about all that, but first, Brandon, how are you doing today?
I'm doing great, Ross. How about yourself?
Yeah, doing really well. Thanks for checking in. We do spend a lot of time thinking about the consumer and the labor market in today's economy, but manufacturing still pulls its weight. It's still very important. And so the work that you all do, looking at things like the ISM PMI and your proprietary slim research, I think is really important. Before we delve into what those are telling you about the economy, I wonder if you could kind of just break down what they are for our viewers first and foremost.
Yeah, of course. So just to explain the ISM manufacturing survey briefly, the ISM survey is the largest manufacturing survey in the country, surveying thousands of supply chain professionals each and every month. And what the goal of that is to determine the direction of US manufacturing. A reading over 50 means that manufacturing is in expansion, while a reading below 50 means that manufacturing is in contraction. And while the ISM surveys their participants on many different fronts, there are five components that go into the headline manufacturing series. Those are new orders, supply deliveries, inventories, production, and employment. Now, I'm sure the folks watching are asking, why do I care about manufacturing when the US hasn't been a manufacturing powerhouse in 40 or 50 years? Well, the answer to that is rather simple because despite the fact that the correlation isn't as high with GDP, the correlation between the ISM manufacturing survey and S&P 500 earnings per share year over year remains robust. And what that means is despite not being responsible for a majority of the growth in the US economy, it is responsible for a lion's share of the volatility in US earnings. As a result, we want to follow that on a monthly basis to see where it's going as a lead for activity in the US economy, broadly speaking. As a result of that, we have our own survey at Strategas called the Strategas Leading Indicator of Manufacturing Survey. That survey was founded in 2012 by Norbert Orr, who used to run the ISM Manufacturing Survey. And what differentiates us from the ISM survey is we just survey participants on new orders and supply deliveries. Now, why do we survey our participants only on two? Well, we do our survey 2 weeks early. So our goal is to come out with our survey sometime around the 20th of each month and survey participants towards the middle of each month. And we pick new orders and supply deliveries because we believe that those are the components in which supply chain professionals will have the best idea of at the middle of the month. And what this does is this allows us to lead the ISM survey.
That's really tremendous context. So you have these surveys that come straight from the purchasing executives at these companies. So straight from the horse's mouth, how supply chains are looking, how new buying is going. And it can give you a really good read on the manufacturing economy. And so you all have your proprietary work as well. And I want to turn it over to you from here and say, now that we know what they are, what are these indicators telling us? What did they say in October and what do they say about the future state of the economy?
So the ISM PMI fell to 46.7 in October. That's a decrease from 49. And what that means is it contracted at a faster pace than before. Previously, you'd seen some sort of slowdown in the rate of decline, but this was one of the lowest readings that we have had this cycle. Now, where does our SLIM survey come into this? Well, our SLIM survey came in at 36.8 in October, and that lead of 2 weeks really gave us an edge to say, okay, maybe manufacturing is going to see some further weakness in October. And our survey has done an exceptional job over the past year of catching turning points. We were early at catching the decline in manufacturing last fall. We did a good job of capturing momentum in the US economy over the summer, and we believe that we are going to accurately catch if there is another leg lower here in manufacturing. And I know there will be a tendency to try to explain away the most recent contractionary reading as a symptom or consequence of the UAW strike. But that's just simply not the case. If you look at the industries within the ISM survey, there was a broad-based collection of industries who were reporting weaker growth in October. So the growth decline cannot just simply be explained by weakness in the auto sector. Now, our supply deliveries index is also very important right now because that maintains a 90% correlation with the ISM supply deliveries index. And that index operates a little bit different than the rest of the ISM because the rest of the ISM says, okay, 50 is increasing, below 50 is decreasing. Whereas the supply deliveries index, a reading below 50 means that supply delivery times are quickening, while a reading above 50 means that supplier delivery times are lengthening. And that was an incredibly helpful tool in looking at supply chain difficulties over the past couple of years. And our index rose to 44 in October. And while it remains quickening, we continue to expect our index to normalize as companies recover from the supply chain disruptions that they saw throughout the pandemic.
So you've got continued supply chain normalization, but set against a backdrop where higher interest rates and a slowing economy are obviously pressuring the manufacturing sector. And as you noted, a good read through for corporate earnings. So we're in the middle of an earnings season right now. It's going pretty well so far, but looking forward could be some clouds on the horizon. So Brandon, this has been really insightful. I think this is really good information for our viewers, and also to know that there's proprietary work that Strategas is doing behind the scenes to get a jump on the things that other folks on the street are looking at. So I want to thank you so much for the time today, and hope we'll get to talk again soon as you get more readings for your survey.
Great. Thanks so much for having me, Ross. Have a great rest of your week.